It's the end of the world as we know it, and I feel like buying some puts, and I'll show it. Welcome to the Sunday Report, and we're growing to 5,000 strong. Actually, almost 6,000. Isn't that awesome? You guys are awesome. That's so exciting. What a blessing. Anyways, welcome back to the Sunday Report. Let's break it down. So a quick recap of last week's trading. Lots of puts all over the place. Been really liking the puts. We see here in the winner circle of the Discord. Been doing well on those. We always try to share at least some of the trades. Austin's way better at this than me. But I'm doing most of my call outs here in this chat, which of course, if you're a contender member, you're seeing all these datas and you're getting all the pings on those call outs. When any of us really set up a trade, this is where all the traders are. So when it comes to this current market environment, for me, I don't like trading against my fundamental sentiment. So I don't like to play calls in this entire environment. I've been mostly playing puts just because I'm very bearish overall. As far as April goes, did really well actually for April. Let's go ahead and pull this up actually. We called the high perfectly at that 450. And then the market was even more bearish than I expected. And twice, actually four times, we actually broke below that 420. We saw it tried to draw some resistance. As soon as that broke, it was like it's like a leaky ship and you can't stop it at this point. And then a lot of these run-ups are in anticipation of like maybe big tech can save the market. And even though Apple did pretty well, the guidance they gave afterwards was terrible, where they're saying, okay, we're definitely going to have supply chain issues. So we're going to do, I think it was 80 billion in buybacks, trying to keep their stock afloat, which, there'll be some good sentiment from there. But 80 billion and a 2 trillion stock, probably not enough to keep it afloat if we do see a massive downturn. And if we go back to that week graph, this is blood, right? This is blood. This is roughness. This is blood in the water, people freaking out, panic, and then we see the Federal Reserve come in and save this, and that's why you have some sort of liquidity and the buildup. Okay, but right now we're in a completely different environment where the Fed's looking at the jobs numbers, they look good. When Fed's looking at inflation, I'm like, well, that's really bad, and they've already been punished for over this entire time period, saying, oh, well, inflation is transitory, it's going away. And even though lots of people are saying right now, inflation looks kind of transitory, it should go away if this, and this, and that, and this align to make it go away. And then it comes to the conversation of like, okay, well, how do those stars align? And it's like, well, I don't know, but it should go away, hopefully. I don't know why I just did that voice, but that's kind of how that conversation is going. It's like a little silly. It's helpful, hopeful. And I just don't see some of those things happening. I don't see the political will for it. I don't see the correct actions being taken. And if you see me be repeatedly bullish on energy, it's because we need systemic changes in that environment to fix these issues, and they are not happening. And until they do happen, I don't care about short-term price action. I think this will continue to go up. Just like I said, I don't care about this small little rally right here, because look at where we are today. So, we have these lots of movements, but this market is headed down. And this high right here, this basically a 480 high, I don't think we'll see that high for another 9 months minimum. So granted, when we get through this, all of this turmoil, I think that we'll get leadership changes. I think we'll get perspective changes. And then public sentiment will start to shift once everything goes really bad. They'll say, okay, wait a second, this policy or that idea are now bad ideas. For sure, absolutely. And then we'll see people step up and start to repair these things. But in the short term, there is no will to fix a lot of these issues that exist. And the bearish factors and catalysts continue to build in this environment on top of one another and make things even worse. So I feel like we're starting to see some of the copium evaporate, although I don't think it's gone yet. Because remember, if we go up to this 3-week graph, look how good you're doing. Look how good you're doing, even if you held through the COVID crash. You're still doing great. You're up like 40% right now, even with some of this blood in the water. If you bought the bottom, you're up like 90% right now. You're still loving it. You're still like, whatever, it's just a small dip. It'll come right back. But I'm fearful of it not coming back. And you can see the volume start to build up again into this downside. And we can see here, these big volume spikes trying to support the market, and then it gives out, and trying to support the market, and then it gives out even worse. This is a bearish market, folks. And the conversations around recessions, which I think we've already sealed deal, going to have a recession. But Bank of America's coming out saying, well, it's actually a 1/3% chance that will maybe. You see, that's the thing I don't like about economists. You hear economists, and they're like, well, the numbers say, and then you talk to people and their sentiment. You talk to the consumer and their sentiment. What actually usually leads to a recession is consumer sentiment dropping off, not what economist sentiment is. So even though I like the numbers, even though I like the input, even though I like all the data, sentiment is a huge factor because it's a revolving door effect, where as sentiment starts to turn, it causes the economy to turn, and then it's a downward spiral until sentiment starts to turn again, and then we can build back up from there. And it's good. It's a good thing. I see lots of people leave my social media followings when I start to get bearish, and they get upset. But think about it. If you're a fitness person, you're working out every day, you're pushing it, go, sprinting every day, lifting heavy weights, and you just grind yourself out with no rest. What happens? Not only are you tired every day, you're always hungry, and then you start to get sickly because your immune system starts to collapse because you just don't take rests and breaks, and these things are good for you. You can't run at 150% at all times. So overall, this reset, to restructure, to rebuild, to learn about how to better balance your growth, better balance your system, better balance your fitness plans. It's all good in the end once you span out to the big chart. So I don't think this is the end of the world. I want to be clear about that. This is not the end of the world, but things are going to get rough. Things are definitely going to get rough, but we're undefeated when it comes to the world ending. So let's go ahead and break down the upcoming week. So when it comes to the data this week, here's the data points. Manufacturing PMI, yes. None of this really matters as much. Auctions will be kind of interesting to keep an eye on. There's limited things to draw a correlation from that. The big thing here is what you want to know. What I would like to know is whether it's retail investors selling bonds or if it's big institutions like the Japanese central bank that's selling bonds. If it's the second one, really bad. If it's the first one, it might be traders selling the lows like they love to do, in which case it would be a great time to go long. So that is something worth keeping in mind. So job openings, expect this to be coming the consensus, not have much of an effect. But then let's get to Wednesday. This is the big day. This is our Fed interest rate decision and the Fed press conference. It'll be really important to pay attention to this day. And with the market right now looking as bloody as it is, I don't think that the Fed will turn on their decision. I think they will continue to fight inflation. They have no data that they can follow that would stop them. Remember, the two big things here that they're looking at are the jobs numbers and the inflation data. Inflation data looks terrible. Job numbers look good. It means that they might go ahead, continue to try to make a sweater with a sledgehammer. And the markets will be the victim in that instance because we're wearing the sweater. So that pretty much covers it for the data right now. It'll also be interesting to see this non-farm payrolls. I didn't mean to highlight unemployment. Unemployment is pretty good, but these non-farm payrolls, keep an eye on the pre-market that day to see what the market thinks about that data. And I'm not going to make predictions on that. Just want to make everyone clear on this. And these Fed speeches coming in on Friday, these have been extremely bearish repeatedly. So, and actually, let's double check, make sure we don't have any ability into the week, and we don't. So keep these in mind too, that these would likely be bearish as well. Could be a rough Friday. But the big thing that we're going to look for is Wednesday. and how the market reacts to this. And we've seen some lots of buying into the Fed decisions. And I would just warn about this one because it's not just U.S. markets that are in turmoil right now. There's a lot of factors going on, and I don't see any reason for the Fed to be dovish in this environment despite all those things because of the major data points that they choose to dictate that they choose to dictate to the factors of them making their interest rate decisions. I don't know why that was so hard to say. Anyways, let's go to company earnings. All right, so we're doing a little bit of a different setup for these. As you can see, I've already typed them all out in the Discord, much better than scrolling through the site. There was a lot of company earnings over the next few weeks. Of course, we've got all the big ones out of the way, but I just want to cover some of these. Remember everything, yada, yada, yada. I think macro is more important right now, and we're going to need to watch the economic data points, and we want to hear what the Fed says, and these won't matter as much, but maybe cause some intraday swings. Anyways, to the reports. Chegg comes in Monday afternoon. I like Chegg. Chegg has to overcome a lot of the bearish sentiment with applications to colleges. We've seen a huge drop-offs, especially for men. Basically off a cliff, and colleges are also struggling. We're not seen as a big of a push even to go to college right now. And so I think fighting those trends, these companies could struggle. I would love to see them try to become a more independent and become an education alternative for people who want to learn things on their own, like Udemy. Although that's another stock that I would like to see perform better. So that's I think, bearish headwinds for Chegg still. Pfizer. So we've seen a lot of headlines over the weekend about a new COVID variant, which we'll talk more about in the briefing, although it's still very ambiguous anyways. But that could help this stock. And obviously, when you're dealing with the government, you're getting guaranteed sales. I imagine them to do just fine. Rock is one of our warehouse automation stocks. I'm still trying to check in with the sector, see how that's going, see if these headwinds become tailwinds, and what that's looking like for them. Now, I imagine that we are starting to make that transition, but this company also is diversified in a lot of different things. They do some robotics, some and automation and things that don't apply to warehouses, and also some special applications for chemical companies as well. Para is Paramount. We've seen all the streaming services get slammed, like body slammed, backhanded. And I kind of wonder if Paramount's probably also going to get hit with this. Interesting one. I don't know other streaming service that well, but when I saw the name, I immediately thought of how the sector is doing. And considering that they're not a top dog in the sector, I expect them the same issues. And I'm pretty sure their pricing is also like $15, which is pretty high. Remember, Apple's the one winning all the awards that should be garnishing more attention, and they're only $5. So, is Para going to really be able to maintain that price point? We'll see. In the afternoon, we have AMD. Same trend for all the chip companies. Intel even come out. Remember, Intel was supposed to have this sturdy, the most sturdy supply chain because they were early adopters to getting more production, domestic production, and building that up. And they're still saying they could have issues to 2024. And that's been the trend. Run up into earnings and then sell off after. Will that trend continue? We'll have to see. But I do think that sell off after has been a strong trend that we've seen with all the companies. And they're going to, I don't think they're going to get enough bullish headwinds to overcome that. Airbnb. I love Airbnb in the long term. This stock's been pretty sturdy in this environment too, which is crazy. And I think part of that's because the strength in housing has been stronger than expected. I guess there's some people who could have opinions on that statement, but remember we were getting headlines about that having a downturn in November, and still have yet to see those excessively bearish trends really come to fruition. So that's interesting. And I think in the long term, 5 years from now, I see Airbnb at $300 a share easily, regardless of what's going on. So bringing us to Starbucks. And Starbucks is actually at pre-COVID levels, which is pretty interesting. I expect this company to likely continue to have some bearish headwinds just due to the inflation, the increase in grocery prices. At some point, people are going to stop spending. $8 for a cup of coffee and instead get their, normal brand from Walmart or their off brand at Aldi's, which is actually pretty good. You can't really hate on it, and Dunkin' Donuts actually makes a good coffee brand as well. Although I've actually taken a break from caffeine in general. So bring us to Lyft. So Lyft is Uber and Lyft. I think both of these companies kind of fall apart when we get self-driving. I still think the self-driving several years away though. So, I mean, in the short term, I think they could do well. We've seen Uber kind of do well in the delivery, but I think that both of these companies should be hurting from recession. Maybe we see the driving part of the business actually start to do better because people are going to still need to be driven around. But and we know as these COVID headlines come back, these are also the typical stocks to get murdered from that environment. I think they're both trading in the low 30s. But I just feel like overall I'm worried about how much debt these companies carry and how they reach profitability because both of them are still burning cash. So it'll be interesting to see how that plays out and whether they really make a recovery. I also have to think about what is the growth for these companies, and I'd be interested to see what the guidance looks like for these companies in the future. How well is this really doing? Is DoorDash taking all their money? I can't help but feel like that might be the case. And Wednesday, for Wednesday afternoon earnings, we have Etsy. I love Etsy. I love the concept of Etsy. I think it's a really cool concept. We also have Shop this week. I still like both of these companies. I think Etsy's like your dream side gig that you run, especially for creative people who like, these arts and crafts hobbies in their free time. The thing here about Etsy, though, is a lot of people, as it becomes easier to make your own website, and actually one of the things I've been digging through for Etsy is I've been going through all these TikTok artists on TikTok, and I always click their link and I'll see like, how are they selling their stuff? Are they going through Shopify or Etsy or like creating their own website or something? And I think that might be something I didn't anticipate for Etsy, is that lots of these people have created their own websites to sell their goods and items and don't go through like an eBay or an Etsy or Shopify. Although Shopify allows you to create apps, and so they have that extra avenue that you can go that I think makes them a better Etsy. So that's interesting. FSR, that's Fisker. I don't know what's going on with Fisker. People love Fisker. And actually, let's pull up the stock. The stock's at $10, so it's at its SPAC price right now. And it's actually really low for this company. Now, the one thing I will say about this company is I am a long overdue on a deep dive on this company and their management team. Supposedly, the person who runs this company is a lot like Steve Jobs, a wickedly intelligent guy who is very bright and has big goals and a record of crushing them. So, and the concept for the cars are supposed to be next gen and extraordinarily cool. And they also are working on a partnership with Apple. So if that's true, if that plays out at $10, this stock is likely a steal. If it's not true, this is on its way to zero. I will say that kind of looks like the risk reward might be pretty interesting at this price point for the stock, and it might be time to go ahead and do that further research. But when I saw the name, it definitely stuck out to me. So Mara. It's the thing I remember is we're in a very bearish point of the cycle for Bitcoin and for the cryptocurrencies in general. So that'll be hurting Mara, especially in this risk-off environment. People will be selling off the stock. I think it hit a low of $17. Let's see if actually that Friday lows trended with Mara. It did, not $15. Okay, so that's crazy low for this stock. And in fact, this could be probably turning into a great trade in the second half of the year when I expect the cryptocurrencies to really start to take off. So that's now an interesting one that's going to be on my watch list, and I'll probably set up some price triggers for that We might do some TA there. I don't expect anything interesting from earnings, but this is an interesting one to look at because I imagine that even, Bitcoin's been relatively stable. It's been a lot more stable than the markets. And as I say that, I should probably pull up the Bitcoin Japanese graph. Yeah, it's been relatively stable. So if you're a miner, you're probably making about as much as you were on average. So especially when we used to get these wild fluctuations, yeah, we've hit some lows, but this month, past 2 months, you've been relatively in the same range, a much tighter range than we've been in the past. So which is actually good for the asset class. It's more stability than we're used to seeing. Okay. On a turnaround, I think the stock could do great. And when earnings report, I think they're probably sitting a little undervalued. Udemy. We already talked about Udemy. Everything. Rewind back to Jake and listen to that. Shopify. Okay, so the big thing about Shopify is I feel like a lot of these businesses in a recession might just go under. And that's concerning. Other than that, though, this stock is extremely cheap right now. I will 100% be listening to their earnings to see what happens here. It could be an interesting straddle play. But, at 411, it's obnoxiously cheap for a stock that has a high of 1762. So we'll be definitely tuning into that one. And that's in the morning, Thursday morning. And that'll also be after the Fed talks. So if this hits new lows into the Fed meeting, it might catch my eye. Square is in the afternoon, or I should be calling them block. I don't know what Jack Dorsey's doing. I don't know anymore. I kind of quit paying attention because I was looking more into macro stuff, and it seemed like he was still caught up on social medias. It doesn't seem like he's going to bring his attention back to Square. Nonetheless, I still put it there because I think PayPal made a nice comeback, and so we could see the same trend start to develop from Square. PayPal's actually been murdered with the market, but their earnings was fine. So I'm surprised actually to see PayPal stock where it's at, which was 88. Square is hovering just below 100. Yeah, the crush on these stocks was surprising to me, and cryptos might be eating their lunch. So it might be time to tune back into these earnings reports and see what these companies are saying. Although I was pretty fine with the last PayPal earnings. Anyways, that's the end of the earnings reports. Let's head over to the briefing. So at this point in the market, we got to start talking about support levels. We're at 411 is the low on Friday. And I think it's time to start talking about 400. After that, 380. If there's a crash, I see low 300s potentially on the way. Now, if we just continue to melt down, I think 380 should give us some solid support. And then we might literally see a return to the pre-COVID high of 338. So how long would that take? When will that come around? Most people are saying that quarter 2 will be the death quarter. And based on the guidance we saw, that could be very true. And it looks like it could be worse than actually most economists expected. And we're seeing a lot of the guidance and some of the warnings from companies also reflect that. And as far as supply chains go, even worse. And I'd like to make a special note of a company that I liked, TDOC, which got smashed in earnings. And actually, let's go ahead and pull that company right on over here. And I will adjust my screen for you so that we can take a look at TDOC. $33 on this stock. I'm going to the 5-day move me. So what happened here? Without diving through the full, all the full financials of the company and going through the books, basically it seems like their competitors are eating more of their lunch than they expected. And one of the big things that we saw, which, by the way, they're still having revenue growth, but the company's had trouble building more growth and memberships. So they're more of getting more money out of each user. And this extra competition is starting to eat, like I said, it's starting to eat their lunch. The main issue here is that they spent a ton on advertising. And previous to that, there wasn't much of a sinking of capital into advertising to build up user growth. And now we're seeing them dump money into building up user growth and that not turn out for them at all. In the long term, this company still has the largest moat in the industry. And even though their competitors are giving them some competition, the reaction to this stock still seems like a bit of an overreaction to me. And I still think this company will grow, maybe slower than people anticipated. Maybe it's just, maybe it's becoming more localized. Maybe people still want to go to their provider near them. Now, if these COVID headlines come back, this company could come back. So let's talk about those headlines. Bill Gates basically came out and he said that there's this new dangerous variant. But I tried to look through some scientific literature, anything I could show you about this. I really couldn't find anything concrete that caught my attention. So that's interesting. That kind of plays into the narrative that we saw previously where people were saying, well, China's identified a new variant and they're just not saying anything. And that's why they're doing more extreme lockdowns. And so that'll be, I'm curious to see how that continues to play out. But it's not really anything that we can speak to right now. I would rather just like to keep an eye on that. And we also saw Biden come out and said that, COVID's still a big thing. And it's interesting to see this narrative sort of return after a bit of a lull. And after people even came out and said that we don't need another vaccine. Even Fauci was saying that. So we could be seeing a shift back to trying to bring some worry about COVID. But I think overall people are over it. So whether this hits stocks or not, we need to see more fear. We need to see some concrete evidence. We need to see actual professionals come out, someone other than a governmental entity speak up about this. So that'll take time. And we just don't want to be blindsided by it. And so as far as that goes, and these supply chain issues and the energy issues, which, by the way, I'm still bullish on energy. Remember, we need big systemic changes here for me to not be bullish, okay? I need more than releasing more reserves. I need more than minor innovation and solar power. I need more than this country's helping this country supplement some short-term issues. No. I need big changes. I need a green light for oil companies where the government won't shut down their production a month later. I need a sentiment change. I need a change of leadership. I need something big for me to not feel bullish in this sector with everything going on. So, and even if we see that, we'll still continue to see some short-term bullishness. Right now, what we're seeing is a lot of squeezes. I expect these squeezes to continue. And I think that it's not going to be it won't even be a sudden thing of they made this decision, everything's going to get better. I think we'll continue to see this kind of chop, and hit new highs. So that's my perspective there. When it comes to bonds, we can't tell. Is it Japan selling all the bonds? Is it retail investors selling? If it's retail selling, it feels bullish. If it's Japan selling, it feels really bearish. We're still having all these currency issues. We're still having these international issues. And then we got the Fed on Wednesday, who's probably going to smack this market even more. Is that priced in? I'd say no. The bonds still are pricing in way more interest rate hikes than the market is. If they decide to come in, if they decide to come in lower, not do the 75 base point increase, but do the 50 base point increase, we could see stocks kind of come up a bit. Or still remember, the thing that matters more here is the tapering of the balance sheet and that quantitative tightening. If they decide to push that off a bit, we could see that be bullish for markets in the short term. But remember, for them to be dovish like that and make that dovish decision, we would need to see the data not support tightening. And we still do not see data actually supporting tightening. And this stock market bleed is far away from what I think would cause them to put in a Fed put, which is another way of saying them actually coming back to provide stimulus for the markets, which I think that would probably be in the low 300s before we saw that. So if they move forward to 75 base point increase, I think this market could get smacked, get walloped. And if they continue to picking up the quantitative tightening, I think we could see continued bleed here. We had also the World Economic Forum be really bearish as well. And especially when I'm looking at these company reports that are coming up, not feeling especially bullish about anything whatsoever. So we might see some technical bounces here after the weekend. Maybe there's some resetting. People are feeling a little bit better. But with these COVID headlines, it might bring more attention to stocks like TDOC. And maybe that's where we see some of that bullish headwinds come back. So that'll be about it for everything that we want to cover today on today's report. Remember to check out the Discord if you want to hear more. We're going to have a few more videos come out this week. I'm also setting up the rest of the streaming software tonight. And so I'll be finishing that probably over the next few hours. And I'm excited to see how that works. And so we'll maybe do a test stream later tonight. And I'll just be doing some gaming or something just to test it out. We'll have a few more videos. We do have a podcast lined up for this week, one that got delayed a few times. So I'm hoping that, we'll get some of that content going. Maybe we'll get some more streams going. Those will mostly be on YouTube. Maybe in the future also on Twitch. But Twitch is also doing weird stuff with my username. They won't let me get it back. And I forgot the login. It's just Twitch is kind of weird. YouTube's more streamlined, and Twitch is fighting me on accounts that I already owned because I own anything NBT related on everywhere. So that's what's going on there. I did finally get approved for the Truth Social account, so maybe I'll go ahead and set that up as well. If you're on there, you want to say hi to me, I might make a few posts on there just for the fun, see what the environment's like over there. Although, if you've been on the TikToks, we've been talking about Elon a lot, and we've been talking about demographics more on there in little short clips, which is not the platform for that, but I've been trying it nonetheless. Anyways, I'm getting derailed. That's about it for the Sunday report. Remember, if there's any topic you want me to cover, anything that caught your eye, any perspective you'd like me to give some input on, or maybe do some research on, make sure to leave it down in the comments below. I hope that you're doing okay in this market environment. Remember, if you're not doing okay, if it's been rough for you, trust me, it's been rough for a lot of people, even hedge fund managers. A lot of people got burned on the TDOC sell-off. Mostly for me, I did hold some TDOC, but it's not much. As I've said repeatedly, I'm not doing a lot of stock picking, so I didn't really have a big allocation in any particular company. Most of my allocations were in energy, especially last month. I was like really big on cash. And this month, as we've been selling off, I've gone ahead and bought some companies that I think have been oversold, and some miners, and just different commodities. So if you want to hear more about that, you can become a Discord subscriber. Remember, that link's down in the bio. We've also done updates on that site as well, and some price changes. So maybe check that out. If you use the coupon TikTok, you can get 50% off that as well, which makes it like, I don't know, $7. So check that out. Hope you enjoyed everything. Hope you enjoyed the content. And I will see you later this week or tomorrow morning in the Discord.